good as we can.
Okay. Nnaji is already here. Ayodeji Balogun is the country director, Afex. At the beginning of the program, I said that we will be looking at commodities today. On the show every day, we take you through commodity prices from Brent crude to gold, to coffee, to cocoa and all of that. Even if you're not seeing it on the screen, you're seeing it on the scroll bar, the ticker. So we try as much as possible to keep you up to speed with what's happening in the commodities market. So if you want to be part of that, today's program, today's interview is what you should take so much attention to. Ayodeji Balogun, country director Afex, is joining me right now. Welcome, Deji. Thanks for joining me on the show today.
Pleasure is mine. Thank you, Nancy.
Now, where should we begin from? How important is the commodities market? How important is it?
I think if you look at it, that agriculture is 24% of our GDP, and crop particularly is about 80% of agricultural sector in terms of share of value. So it means it is actually somewhere around 20% of the total GDP. By the time that you also look at it, that the second, third, and fourth foreign exchange earner to governments are commodities. So this is actually something that should be on the front line of every government's agenda, both at federal level, at state. And then even if you look at it from the development angle, 70% of our workforce work in agriculture. So by all strata, I think this should be a very important topic for us.
The question now will be, how many farmers do we have in Nigeria now? Do you have an idea?
So depending on who you listen to, statistics says about 35 million farmers in general, about 17, 18 million smallholder farmers focused on crop and kind of focused on commercial sales, so not just subsistence farmers. So somewhere between 17 to 18 million farmers.
Yeah, I like that you said it depends on who you are listening to. But the issue there is that we have quite a whole lot of people that are into farming, and we have a lot of smallholder farmers, which we'll come to in a bit. Which crop is number one in Nigeria now in terms of exporting? Which crop? Because I know we should have like top 10 or top 20. So, talk to me about it. You are the one that looks at
if you start from production, so cassava is by largest in volume, in terms of volume produced. 57 million metric tons of cassava is produced by Nigeria. We're the largest in the world. Next to that is yam, and then next to that in terms of volume, and next to that is maize. If you look at it from industrial usage of crop, which crop do the industries use the most? Then maize comes the first within the country. And if you look at it,
beer production and all that.
Because of food processing. The livestock sector, a kg of chicken is feed milling. It uses a lot of maize and soybeans for production.
Okay, and sorghum that is for beer actually.
Sorghum goes into the breweries. Some maize actually goes into for brewing as well. Rice, paddy rice is another very important crop, about 6 million. So sorghum and rice are almost neck to neck at about 6.5, 6.7 million metric tons each, and both of them also go to industrial processing. From the export angle, cocoa is by far in value, the largest export crop for Nigeria. Next to it is sesame, and then it goes down that list.
Yeah, that's in terms of what?
Value.
In terms of value.
Dollar value.
Fantastic. Yes, because I was coming to that even though you said that cassava, we produce a lot of cassava, a lot of yam, we are not getting dollar value for those commodities.
Yes, it's one of those, Nigeria is the largest exporter of cassava, but not by far behind countries like Thailand, Vietnam, in terms of global trade of cassava and its derivative products. And a number of factors contribute to that. It's one, what is our labor efficiency? What's our yield per hectare? What's the average cost of producing X farm itself? Then how do you then create the efficiency and the cost of logistics to move it from production areas to the border and then be able to fulfill large. It's one of those crops that has used into the global ethanol industry. And if we can actually create that linkage with the global market, then we will be able to capture a lot of the value.
How important is the commodity, or how important is the development of the commodities market translating into a vibrant commodities exchange in Nigeria? Because you know the story of the commodity exchange in Nigeria, or the commodities market, has been there since I think since the colonial days, at least from my own research, 1848 or so, since the colonial masters have found it necessary to have a vibrant commodities market. But since that time, is it not over 100 years or so, we still do not have a vibrant commodities market. People like you just came into the game, I think 2014 or so, to get that sector sorted out. But it's still not uhuru yet. So how important is the development of a commodities exchange, a commodities market?
Thank you, Nancy. It is very, very important in many folds, and we'll get to that. But just following history lane like you laid out. So if you look at the history of commodities in Nigeria, you will know that Nigeria post-independence, similar to all other African continents, were commodity-led economies. Yes. It was commodity provided all our income, and then our exchange rates were almost one-to-one with other foreign currencies, if not stronger. And then you had the era of the marketing board in the 70s to the early 80s, and that was their strongest era when they actually did have the groundnut pyramids and the cocoa pyramids that we talk about. Nigeria was, had 28% market share in global oil palm trade. Now it does have less than 0.2% in global trade. We are now of palm oil. We had 28%. Similar thing for groundnuts. We had about 20–30% market share. Now we're by far not even on the top 10 global traders of growth. Now, we had a problem with the marketing boards, and at that point, the marketing boards were abolished around 1986. 86, yes. And I think that's one of the problems, that at the point where the marketing boards were abolished, there was no institutional provision to manage the supply chain linking the farmers with the market. It was left, and then you had a number of local industrialists, foreign players, now build up structures that privately solve those problems. But like almost all private individuals would naturally take care of their own profit before others. So what happened was a situation where it was a beneficiation of the exporter at the cost of the producer. And then people lost interest, and then the entire supply chain started to suffer. So we have an era now where farmers do produce, first for domestic consumption, next for trade within their community, and then the excess they sell out for cash. And to the extent that they're able to get cash from that crop, they reinvest the following year. But because they're not optimal, and then they're not efficient, and they're very small, it's a struggle for them to compete with international prices. And that's where we have the problem. Now, from a marketing standpoint, we started in 2013, 2014 in Nigeria, operations in 2014 in Nigeria, and we focused on building the underlying infrastructure because it's a market of trust. So you need to be able to manage production, ensure the farmers are producing efficiently and profitably, create linkages with storage to manage post-harvest storages, quality assurance. So when a buyer is buying through a platform, is assured that the product exists and exists at the grade and the quality that he needs it. So that was what we've built in the last 4 or 5 years. And now we're actually connecting it with the capital markets and bringing a lot of capital market products that are tradable for both institutional and retail investors.
Now, I want you to actually reiterate the importance of having a vibrant, you know that I keep on saying vibrant commodity exchange, because we cannot keep touting diversification, diversification, diversification if we do not have a vibrant commodity exchange. In Nigeria Commodity Exchange, now NCX, I talked about the transition earlier. And I also talked about even the commodities market or the exchange being that mechanism whereby you connect buyers and sellers. And for us to have, or if we have a vibrant commodities exchange, we do know that it's a value chain because you have the exchange, you have the farmers, you have the merchants, you have the aggregators, you have even the warehouse people, you have the operators, you have guys like you, you have, I mentioned farmers and all of that. So it's a long value chain that not only ensures food security for the country, employment, and economic diversification. So how very important is this? I need you to sound it, so that these people, when they are listening, they will know that we've not really started at all. If we're talking about agricultural diversification, there is need for that to be vibrant?
So let's start from the farmer, because that's, in my opinion, the most important actor in the value chain, because it starts with him. He's the guy that invests and goes to produce for almost 180 days and creates this product and has the most invested in the sector. So currently, the farmers are at the mercy of the market. When they produce when prices are cheapest. They need this cash, so they sell at the lowest price. 3 months down the line, they go to the same market and then they buy the same product for consumption at twice the price that they sold it for, because they don't have the financing to wait and store it. And when they store it, they have post-harvest losses. First, an exchange, a functional exchange, will create an ecosystem that solves issues around the farmer's competitiveness. It will make him financially included. It would ensure that he has the right access to credit to produce optimally. It would ensure that when he produces, he has access to storage to be able to store the products and not lose a significant volume in storage. And when he wants to sell, he would have access to trade that product from the comfort of his home. And then the exchange will bring innovation and settlement. I would match 1,000 orders of different farmers into one big order of a big buyer, and the farmer gets premium value for it. Now, we do that for over 40,000 farmers actively trade on the exchange. We work with over 100,000 farmers across all the spectrum of products and services that we provide in the country, and that's one of the things that we are very focused on. If you also move further down the line, as a processing company, currently there are no ways to hedge your cost of production. You couldn't hedge your price risk. You'll just start production, and then every month you go into the market and you buy the physical products to use. So you cannot manage and ensure that your cost of production is smooth over the year. That's one of the values that an exchange brings to the table. It ensures that you can either buy spots or buy forwards or futures to manage your price risk. For a country globally, with increased production, with the right incentives, you grow the economy. You grow the economy, particularly at the bottom of the pyramid. You bring out poor people into...
Which is the bottom of the pyramid now is the farmers.
It's the focus, the poor people that produce the food that we eat as a country. You provide services, and you're not just giving handouts. You're building institutions that can make them economic actors, and by themselves they can grow wealth and accumulate wealth. So it's structurally great for the country. Also, it helps you diversify your income. One of the biggest challenges is that when global partners want to trade with Nigeria, they have to go one-on-one to trade with individuals. There's no centralized platform where you could trade with Nigeria for sesame seed or cocoa
where there's
or
an
any
aggregation of a lot of...
Where there's no, so if you had a commodities exchange, if it's online, everybody will be able to play in, monitor prices, and be able to transact. So for instance, we just launched the first commodities index for the country, but even for Africa. So the first commodities index that tracks price of certain commodities in the country in Nigeria, we launched, and that is published daily, starting from January this year.
Okay. Now, if we take a look at all this that you've mentioned, where do you think is the weakest link?
The weakest link is at the farmer.
Oh, and that is even the fundamental.
And that's the fundamental.
Wow.
And if we don't address it from there, we don't make the farmers economic actors, we don't make them produce competitively. Rice from Thailand shipped over 5,000 kilometers will land at our borders cheaper than what we've produced here in Nigeria.
Now, as someone that is generally in the field, what do you think of this rice revolution in Nigeria? Is it true? Yes or no?
Honestly, there's been a significant growth trend. If you look at it from a trend of 5-6 years, volume, consciousness, yields, share of land that goes to cultivate rice has increased. Quality of the finished product has also increased significantly. Investment in machineries and equipment, international actors coming into play locally as equal. Do I completely agree with the data and the number out there? Maybe I'll discount it a bit.
Maybe, but is there improvement?
There is obvious
Even though we're seeing the agricultural output, especially with crop production dropping over the last 2 or 3 quarters.
So it's also, if you look at it, economics is statistics when you come back to it. And if you look at it, if you take a longer spectrum, while the entire economy was going through a recession, agriculture stood at above 4% real growth quarter on quarter through the entire recession. Now, because you're comparing, growth is comparing present with the past. So while for other sectors, you're comparing it with a low level, for agriculture, you're comparing with a high. So the level of growth would actually be lower than for other sectors. But if you look at it in absolute terms and you draw out the trend, it's still strong and it's still doing great.
Are you bullish or bearish on commodities this year, bearing in mind that these commodities that we even produce here in Nigeria are traded internationally and they have international benchmarks in terms of prices? Talking about cocoa, which we talked about, I think cocoa was doing at about $3,000 a metric ton. Then it fell. It wasn't a good time for cocoa. You're smiling, isn't it? I know what you're doing, you know. You know, then we have palm oil, which you also mentioned, about $2,000 US dollars right now. It wasn't also a good time for coffee, I guess, for cocoa and all of that. So are you bearish or bullish on commodities this year? So
if you look at it, you know, it's a business cycle, and global commodities prices fell late 2016, early 2017, significantly, and that affected prices of particularly commodities that are globally traded, cocoa, oil palm, and a few other ones like that. We're getting to a point where both locally and internationally we're getting stronger, and local prices have also hit their bottom and they're going high. Now, for us locally, if it depends on who you are, this is a year where prices are above break-even for the farmer, but also below parity for the processor. So for a processing plant that has to make a decision between buying locally or importing, it finds that it makes economic sense for him to buy locally as at today. And we actually think that for H1, the first half of 2019, local prices will remain competitive for most of the commodities. From a profitability standpoint, export crops like cocoa, from the beginning of the season, prices have gone high. In October 2017 till date, prices has gone high by almost 20%. Farmers that got about 600,000 in October, early November, in cocoa producing states in Nigeria now get as high as 700 or a bit higher than 700,000 naira.
700,000 what?
Naira per metric ton for cocoa in the local market, which is fairly comparable with what is obtainable in the international market. The trends are parallel. So we're actually bullish. We think the market this year will be good in terms of volumes traded, in terms of activity in the market. We think it would also be a trend that wouldn't be super normal, so it wouldn't exceed what buyers are comfortable with. Local buyers are comfortable with, so prices wouldn't go too high.
How about the concerns about China? Won't it affect your forecasts? You know, because we saw even what happened was it last year, for example, with soybeans. Yes, China retreating from buying U.S. soybeans, and it affected even the other commodities. So the trade dispute now between U.S. and China, would it affect your? So
it does. Soya is one of those crops where even the country produces less than half of what it needs. Production is a little bit above.
Talking about Nigeria.
Talking about Nigeria, we produce a little bit above 650,000 metric ton.
So we don't produce even the one we need.
We don't produce enough that we need, and demand is about 1.5 million metric tons. So and soya is one of the crops in the last 2-3 years that has had the highest price appreciation, and we think that would remain for another 2-3 years. And it's actually one of those that we're advocating with government to increase, and development partners to increase a lot of efforts in terms of helping the farmers that produce, helping the regions that can grow soybeans so that we can actually increase the volume. But as we speak today, soya prices in Nigerian origin is cheaper than imported soybeans.
Now, for those listening to us and trying to make sense of all the brouhaha and the grammar Turenchi that we're speaking right now, how can they come into the commodities market by investing? Isn't it?
Yeah. So if you look at it, we're actually breaking that barrier and making it as simple as it can be. One is that if you look at the trends, we have the index that summarizes all this that we're speaking about in terms of the fundamentals and the drivers into a simple number that goes up or down on a daily basis that people can track on Afex platforms and as well as other channels. It's also one that you could also go onto a website, sign up with a number of our brokerage firms, and then you could make investments into assets that are exchange driven, and they're very simple, created for both retail and institutional investors that can invest against commodity-backed assets.
Oh, okay. Can those watching us right now also invest by being like smallholder farmers. For someone that have listened to us now, and you've just said that we do not produce as much soya beans as we should be producing, and wants to go into soya beans farming, for example.
So there are two worlds. Yes, there is enough, and we work with a lot of development partners that we could connect them with. We also provide input financing scheme for farmers. Last year, we provided input loans to 25,000 smallholder farmers across about 5 states in the country. This year, we're targeting 50,000 farmers that we will connect to access to credit, but access to the right type of products that will ensure that they have the right yields, and then give them the training that they need to produce it. And then when they produce, we provide the storage and the trading facility to connect them with the markets. So we have a comprehensive solution, both for an elite commercial farm, but also working down to a very rural farm.
Now let's take a look at Naira's value vis-a-vis inflation. Do you think that it will affect commodities markets, especially from the Nigerian perspective?
I think one of the biggest variables that affect local prices is dollar. If you look at local commodity prices, move very much in correlation with the dollar parallel market exchange rate.
I'm talking about even the dollar. Dollar has so much strength. At least the dollar has garnered so much strength, at least within the last 2 years.
Yeah,
the dollar has been so strong, so and inflation is also creeping into our own naira.
The naira. So if you again, we're in an electioneering season. There are a lot of variables around the political atmosphere that is hard to lay your hands on what the directions will be. But as a practitioner or as an analyst, I would want to have a view on the dollar, and that would influence my position on commodities. But then again, if you compare asset classes, one of the very few asset class that almost matches a dollar correlation that could give you a dollar edge are actually commodity prices, local commodity prices.
Out of all those commodities we've talked about, let's take a look at corn, sugar. Sugar has not been having it good anyway in the last few
prices
months.
Went very high internationally, and then now has been a crash in the last
so for like
months.
Processing companies like Dangote, for example, all those companies that do sugar, it wouldn't be an uhuru time for them. But the question is, for commodities such as corn, sugar, palm oil, cocoa, and all of that, where are you on those commodities?
So what we've seen is a trend where a lot of the processing companies are actually backward integrating. They're actually investing very significantly in supply chains that bring products, help the farmer to produce more optimally, produce at the right quality and variety that they need, for instance, and then they bring that into their manufacturing stream. This week, earlier in the week, we did launch a program with Diageo, Grow Nigeria, which last year connected 5,000 smallholder farmers growing sorghum to their supply chain. And we're looking at working with 15,000. We work with Dangote Group to connect about 8,000 smallholder farmers producing rice into their supply chain. And we have a number of these corporates that we work with like that, which invest very intensively in the entire supply chain. So, and for them, that's an agent strategy that regardless of what happens in international prices, to the extent that as a country, we are competitive in growing those commodities, we actually will be hedged and will be safe from whatever happens on the global price. And I think that's what industries should support and work towards, and government should give the policy nudge and the enable environments to support processors that do want to source locally and invest in that process.
How about the impact of insecurity? Impacting especially the food belt area where these farmers are.
It is.
And also impacting not just even, impacting the food belt and even the food when produced, the yields.
Yeah, the yields and even the cost. So if you're producing, we did a program in Yobe State this year that worked with about almost 1,000 farmers to produce soya beans and maize. And while they harvested, we've recovered and repaid the financial institution, and the grains are connected with the markets. But the cost of logistics is just extremely expensive because of the level of security. So you then find that it then impacts on the commercial viability of the smallholder farmer in those locations, and actually reduces what he gets as a share of income. So it is indeed a challenge, and it's also one of the things limiting the expansion of crops like soybeans, because a number of the areas, for instance, like Benue State, that grows a lot of soybeans, actually do get affected with a number of security issues. So it's one of the things, and we think our government is addressing this squarely. We were in a meeting with the Honorable Minister of Agriculture earlier in the week, and it was one of the things that is top on his agenda, even as we speak. And we're positive.
Are we seeing speed? Because even with this insecurity situation now, we've seen insecurity move from not just the northeast into other parts of the north, which is also the food belt. Benue State, we know the killings going on, and farmers not being in their farms and all of that. So even if as we want to develop the commodities market, or getting people informed that, oh, you can make money by even growing some of these commodities, it may just be lip service.
So when we look at, the symptom is security, but fundamental underlying that is economic activity, economic empowerment. If people are not economically empowered, if they're not economically integrated, it'll be difficult for you to be able to combat this. So, what we advocate is a multi-pronged approach that actually creates economic opportunities for people. And when people are busy, when people are invested, when people have income earning streams, it reduces their chances of being vulnerable. It makes them more stable and strong. And I think that's how we need to address this as a country.
Okay, let's take a few comments coming through. In case you want to join the conversation, please feel free to do that. You can tweet me right now at Nancy Ilo. Amaju says, where's the role of R&D, that's research and development, in boosting commodity production between ivory towers and the markets? Anyway, ASU is on strike. I understand what he's trying to say in terms of research coming in from our universities, as you know. A lot more can be done in terms of the connection between the institutions, academia, and the business commercial sectors. But you also have R&D institutions like IITA, taking a business approach to development. So there's a move that we call R4D these days, which is research for development, not just research and development. How do you bring commercialization strategies into the labs? Do you think that even those research institutions, you just mentioned IITA, we have the Cocoa Research Institute of Nigeria. We also have NIFOR,
Allpam,
and all of that. How are these institutions still valuable?
They are there.
They are there, but
they could do a lot better. They could do a lot better.
If you also speak to them, they will tell you, Nancy, no finance. I'm just going into their mind. Yes. They will tell, oh, we don't have so much money. What do you think?
Honestly, we're in a situation, particularly in the agricultural sector, that we have actually left development and research for the development sector. We've assumed that foreign partners, foreign aid would actually do the thinking and the intellect of creating right material for us as a country. And I think that's fundamentally a problem. But it also comes into the budgeting and the budgetary allocation for agriculture. Until you find a day where agriculture is well funded, right from the Federation, players in the agricultural value chain are well taxed, and that tax income actually deliberately goes into developing products that work for us, we will still remain at it with these problems.
Okay. So I think we should just end this show here, but in just 5 seconds, what do you think will be the commodities market behavior, positive or negative?
Positive.
Positive.
Or bullish.
All right. Should I take your words to the bank?